side at Yankee Stadium where the New York...
Joe tried to the left, right, the head both punches, misses, Jeff drops inside, and he arches across the ring. He lands a terrific left reverse with body against the roof and takes a terrific right in the knockdown. Josh is now 2-3.
Good morning, everybody, and welcome to the opening range. My name is Jim Cagnina with NinjaTrader. It is May 20th, 2022, Friday. Happy Friday, everybody. Thank you for being here. We have a lot of work to do today. We're not done yet. We're not done yet until cocktail hour later on after bars closing. Do want to give a special shout out today to Mr. Sunday School. Good morning, Mr. Sunday School, for being here, the first to chime in. Greatly appreciate it. Before we go any further, I do want to remind everybody, trading futures, options on futures involve substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that can be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. We understand everybody's unique and different in this world. My personal definition: money I could afford to lose, doesn't change my lifestyle, lengthen my retirement horizon, or overly anger Mrs. Cagnina. Now that third part's a little tongue-in-cheek, but not really. Stress in life matters. We want to be comfortable. We make bad decisions when we're under stress. We are human beings after all. Trading on a real-time simulated live NinjaTrader platform today. None of this should be construed as trade or investment advice. Feel free to shoot in there any kind of information. Questions, margins, performance bonds, leverage, how many contracts you should trade, and all that good stuff. All right, well, let's get started here. We have Tom with me today, so it's going to be good morning, Tom. How are you? Oh, Tom's almost with me today. All right, let's keep going forward here. I just want to take a look at this the chart right here. This is the E-mini S&P chart. Tom will refresh something and be with us in a second. E-mini S&P double bottom right here. You know, we missed the actual bottom by 1.4 ticks, but that's close enough for government work as far as I'm concerned. We're still way below this inside fib 23.6%. The outside fib, we're way far away up. You know, I'm bearish. End of story. I am bearish right now in this particular point of view. Let's take a look at the economic releases, though, while we have a chance. And I'm going to pull up, Jason's going to pull up the economic release page today. And we have quarterly. It's light. It's weak. There's not that much stuff going on. But don't let that fool you. Buyers and sellers are still moving. And we have options expiration today. 10 a.m. quarterly services survey. Census Bureau probably is not going to move the needle very much. Baker Hughes could, for sure. So pay attention to that. Isabella, if you're with us, and I know you are, cut and paste that Baker Hughes rig count summary page in the Yahoo chat and all the chats, so that folks might want to click on that and be ready for that. That's it. It's an inventory report released by the U.S. government, 1 p.m. on Fridays, not by the U.S. government, by Baker Hughes, which is an independent organization, highly respected, and they do a lot of data crunching right there. And there's a lot of stuff behind a paywall too, if you're interested in really, really digging deep into what's going on with the energy markets. We had a couple of weird kind of, I don't know what to call it. I don't know if it's weird or not, but comments by Bank of England. Inflation forecast will rise into the double. This is pill, right? Again, we have this kind of strange behavior with Bank of England board members and ECB board members. Bank of England feels like inflation forecast will rise into double digits. And then ECB, Kazakh says, I hope, he says, I hope, this is an ECB guy, right? I hope the first rate increase will happen in July. And Nagel, also ECB, more rate hikes could follow in short succession. I mean, it seems like they're a year behind us in the US. That's what it seems like to me when I hear these kind of comments. And then Japan, the Prime Minister Kishida, I'm sure I pronounced that wrong. I'm trying my best. I have all the respect in the world for him. Rapid yen movements are undesirable. In any event, that was interesting. We'll get to the daily charts right now. And I think Tom is back with us right now. All right. Awesome. Tom, you're
Hey,
back. You made it.
good morning. Yeah, I had to shake off the modem a little bit and get right back to it. Yeah, interesting day today. Looking forward to seeing what happens today.
Yeah, for sure. But one thing I bet you didn't know, back in 1873, May 20th, blue jeans were patented. That's the factoid of the morning.
There we go.
And interestingly enough, though, they were thought of as a poor man's clothing, right? It was the workers and the farmers and folks would wear because they were durable. And then when you got into the 30s and 40s and 40s and 50s, 30s and 40s rather, popular culture, 20s, 30s, and 40s, popular culture was like, no, if you're wearing, you're low class if you're wearing these blue jeans. And they had that mentality. And then sure, then James Dean pops out on the scene in the 50s, and we're off to the races with designer jeans ever since. You just don't get these kind of factoids any other futures trading show, by the way. Thanks for coming, everybody. Appreciate you being here today. So let's go through these things really quickly because we have a couple of really interesting charts I want to look at, including micro Bitcoin in a second, and lumber. Thomas pointed out some very interesting phenomenon I want to share with lumber. E-mini Nasdaq, I think, is structurally exactly the same or pretty close to the same with the ES, a little bit weaker. And I'm going to, again, double bottom here. And as I go through these, I'm going to ask Tom, hey, interrupt me if you see something you want to say on any of these particular charts. But from a futures, stock index futures point of view, again, looking for places to sell. Although open-minded, at some point, remember, these markets kind of oscillate up and down, up and down. It just isn't, it's not lock limit down every day. So you are going to have, as Bobby Iacchino pointed out a couple of weeks ago, you could have a face-ripping rally in a bear market. And so I thought, again, I want to be open-minded there. RTY, a little bit stronger. Nice doji yesterday.
Yeah, Jim, let's talk about that real quick. Overall trend still bearish, still see the channel, still see that this market's trending downward. However, you're seeing it as I do, the doji right there, the bearish candle here, the doji here, where buyers and sellers can't agree on movement. We stayed at the same price. We open and close right around where we closed the day before. That's could be a strong reversal candle. Now we're going into a bullish candle, and again, not at the bottom of a downtrend. That's fine. This could be that part of the rally still within the downtrend that you might not expect. And again, we've talked about it this week. Coming on options expiration, this might be a strong bullish candle. Still we still keep our overall bearish bias.
Last night I was kind of looking at options expiration and numbers. Remember, these even numbers are important. So 1800 is the number in the Russell 2000, where a lot of these options are going to expire. So that's a good point, though, Tom. That's awesome. Let's go over to the YM. I'm disappointed in the YM. I don't know how you feel about it.
Well, yeah, yesterday was a little more bearish than the other indices, right? And so it has to take up, in order to get that kind of reversal pattern that I like to see. Well, we're not going to get it, right? Because we opened where we closed. Not, that happens in the futures market, right? Because it's a 23-hour market. So just taking out yesterday's candle is an accomplishment, I think, for the Dow. The psychological number, 31 or 32, right? So we're closer to 31, 32. It'll be interesting to see what happens here. Although the same dynamics are in play, I just don't think the Dow is used as much, say, the E-mini for any kind of positioning in the institutional side. It's just not as attractive.
All right. I'm surprised by that, but I agree with you on that. We're going to leapfrog over to the euro because, again, I'm fascinated with this idea that we're surging dollar. This is a Wall Street Journal article this morning. It's behind a firewall, but if you get the Wall Street Journal, you could find it. It's surging dollar raises possibility of parity with the euro, and we were talking about parity being 1.0000. Right now, we're kind of moving up in the channel to that 23.6% retracement. Which is at 1.0643. I think what's happening is that we have the hawkish, dovish kind of pattern between the two currencies. We have Europe's is taking it a lot harder on the chin from an energy point of view, with China's consumption down. It's also going to put some downward pressures on the euro. I think so. I got my eyes on it. I am bearish here, but we are seeing a pullback on the way up. What are you seeing from a technical analysis point of view, Tom?
Yeah, same thing. We're still kind of in that channel. If we were to draw a channel of lows to highs, lower lows, lower highs, we're still within that channel. 23. You might find that the 23% level, if we trade up there, we might hit that channel and just come right back down. Overall, still bearish. It could go to parity, but with the economics numbers coming out this week, they weren't all that strong. It's just a matter of how strong were they compared to other countries, right? The euro, other European countries, Great Britain. So, you hear in the news that we might go to parity, but I don't know. The news this week certainly wasn't good in various reports that came out this week.
Yeah, for sure. Anyway, so I got my eyes on this as well, for sure. I do want to leapfrog over to something you pointed out to me on lumber, and that I'm kind of I'm using this as a gauge for everything housing. This is kind of my, like copper's like my China gauge, lumber is like my housing gauge. I just have a daily chart up here with an RSI on it, Tom.
Right. So with lumber, we've seen in the last couple of days just these big downward moves. I think lumber has moved from about 812 on the high 2 days ago to right now we're trading around 690. So that's it's over 100 handles. It's a pretty big move, right? That's over 10%. We're just getting into the oversold area with RSI, and the moving averages, look at the two moving averages. That's a 50 and a 200 day exponential moving average. The 50 is just about to cross the 200. Now, on a long-term basis, that is a very bearish sentiment, right? They're long moving averages, so they will cross well after the downtrend starts. So we see, there is a downtrend that you go back to March. But if that 50 stays below the 200, that's just not good news for lumber going forward. And with the reports that came out this week, again, I keep going back to this. There's not a lot of demand. With we're easing off on the housing starts. There's less demand for lumber. This is great if you're a buyer, right? If you're building a house, you own a construction company and you need lumber. This is great, but with the housing starts not being there, the technicals are lining up. We're just about to get into oversold territory in the RSI, which again doesn't mean that we have to. It doesn't signal a reversal. It doesn't say, we're too overbought, let's go back up to neutral. We could sit below this 30 on the RSI. Anything under that is really considered oversold generally. So we could sit oversold for a while as the market continues to trend downward. Really what we're looking for is, if we're down there for a while, we want to pop back out to get to be assured that maybe this trend is reversing. So I just don't see anything really positive for lumber.
Yeah, I'm super bearish too. And if you can really briefly just kind of explain, I toggled over to RSI from MACD. This is one of those oscillators. It doesn't oscillate around a zero line, but we have a 70 and a 30 level that seems to be important. Could you explain that real quick?
Sure. The RSI is an oscillator. It's a momentum study. It is a bounded study. It will never go below zero. It'll never go above 100. It's a scale. And it's the scale of, basically, I'm just going to break it down. We're not going to do the math. It's the current price based on its historical price, where it is. It's the relative strength index. So what is the current price telling us about the current price strength compared to the past, let's say 14 days? I believe you have a 14 period RSI. It takes that data into consideration and comes up with a ranking, if you will, of how strong the current price is compared to its history. In a downtrend, the RSI should be moving down. In an uptrend, it should be moving up. So the idea is that when we're really moving in a trend, we tend to go below the 30 level, and some people will use different values. They'll tweak it to what they're comfortable with or what they've analyzed. But 30 is considered oversold, meaning, boy, this product, this lumber, it can't get much more low, can't go lower. Well, of course it can, right? On the RSI, it can only go to 0. That's the lowest it can go. So you'll see what happens sometimes as it gets below 30, it goes to 29, 28, and it kind of hangs out there while the market continues to trend down. I'm not really interested in that. I look at the number, I say, boy, this is really in a downtrend. It's under 30. But it's when it pops back above that some people say, we're coming out of that trend. And it might be an opportune time to rethink our bias about this product.
Yeah, and I love crosses. I love it when they cross magic lines like that. So that's a great observation. Appreciate that assist there. Again, I'm not an RSI guy, but I'm going to be. So let's do this real quick, though. Let's take a real quick 30-second timeout, and we'll get right into the 10-minute charts.
You deserve full market transparency. You deserve the flexibility to trade on your own schedule. You deserve access to professional futures trading tools. NinjaTrader, because you deserve more. Start trading futures at NinjaTrader.com. Capture the excitement and opportunity of crypto trading in a secure and highly regulated marketplace. Meet cryptocurrency futures. Go long, go short, you decide. Start trading futures at NinjaTrader.com.
All right, we are back. I lied about the 10-minute chart. We're going to talk about Bitcoin in a second, but I do want to acknowledge Level 2 Trading's comment. Jim, you saying that you are disappointed in the YM. Your tone sounded like you were talking to a teenage kid when they do something wrong. I know I was in parenting mode. It's been one of the stronger ones, right? It's been one of the stronger ones lately, and then now it's not, and my feelings are hurt, but I'll be able to get over that. And then Patrick adds, Levi Strauss got its start in the California gold rush in San Francisco in 1840s. Totally makes sense. You needed rugged wear. That was rough country. You were doing rough work. That makes total sense. Thank you for that, Patrick. Let's take a look, Tom, at Bitcoin, because I'm having this is a renaissance for me. I think Bitcoin, my opinion, Bitcoin's changing. The micro Bitcoin futures, there's going to be a winner in this Bitcoin bonanza, as I'll call it. And I think the focus is on Bitcoin. And I've been told I shouldn't spell it this way. I should spell it without the capital C. What are you thinking on Bitcoin, and just generally?
Well, I agree with the capital C. So I like it. Let's look at the RSI first, because we were just talking about that. The RSI and the Bitcoin, there's that pop above 30, right? So, the big move about a week or two ago, that big red candle, that bullish candle, brought the RSI way down, and it's just was in this bearish mode. But now it looks like it's leveled off, and the RSI is reflecting that. So the RSI relative, as we go along, as we even just consolidate, that RSI is going to pop up, because those really big moves before, those big bearish moves, are falling off the calculation. And so now we're kind of coming into a consolidation area. You might think that, okay, the trend is over, we're finding a base. And where it goes from here, it's to be determined. Does it continue down? Are we just finding a respite right now, or is this something that could trend higher? I'm still cautious. That was a big move, but the indications here are that this could be the start of an uptrend. And one other thing I was looking at, we don't have it here, MACD. MACD quite hasn't given that let's go bull move yet, but it is poised to. And what I mean by that is the MACD line and its signal line are so close, and that MACD line is so close to crossing above. If we see another up day in Bitcoin, or another couple up days in Bitcoin, those people who trade the MACD, trade the signals, might come in and push it up even higher. Awesome.
And I do actually have a trade idea going on here, and I'm starting to become a fan. really an interesting market, and there's a lot of overall market participants. And then CME launched this great product here. And, so again, I'm thinking my bias today might be, we are open, by the way. We'll shoot over the ES. I know we got a lot of interest there. So early this morning, I just threw a limit order in, and I just picked off that volume node way below prices of value. And then it corresponded to yesterday's point of control. And I feel like as I'm getting my feet wet here in these micro Bitcoin futures, I want to give myself some room for error here. And that's why my target is so far down with the stop well below the pivot. So I just wanted to kind of share that. And we'll kind of keep an eye on that as we go forward here. Yes, let's look at this opening candle. We got a volume profile, Tom, that looks like a P formation, right? It's got all the volume at the top. We started out low last night. We had buyers trickling in pretty much most of the night. And then when Europe opened up, a couple of dominant green candles, and we shot all the way up to 39.5 pretty much. And now we're kind of open, and we'll see what the U.S. Open brings us.
Right. And E. Robbins mentions that there's a big block order on ES at 39.40, right? So above where we are now. But, that could explain the orders that we see, since 4 o'clock up at that level. And in anticipation of a pop, right? And, again, coming back to what's driving this market. We don't really have news today that we know of that might move it. Well, we do know about the options expiration, and maybe that big block order is part of that dynamic. Now we just saw the point of control move a little bit. We're seeing a lot of volume there. We're seeing VWAP. We're above VWAP. So are we going to take that out? Are we going to come back down? Are we going to go to the bottom of the value area? Right. That's another area we might look at. I don't see pivots anywhere, right? I see the pivot point at the bottom at what is it? 39, just under 3,900. On a wide trading day, we're not going to see the pivots really something we can play with. We might bisect them. We might use that Fibonacci retracement tool to bisect them as well. But, it's early. We'll see what happens. Where the VWAP is providing support right now. So we'll see if that continues.
Yeah, and the trend is up. So I'm going to draw my fib line low to high. I'm just going to take the whole. I'm going to take into account the whole day so far, the whole field right now, as we're looking at this. There's a couple other places too that you could draw a fib line. There's many other places, but as an example, European open low to the high, there would be another kind of a smaller range, but that's a lot of traders might do that as well, low to high. I like to look at the whole field, and that's what we're looking at right now. Right as we're at that point of control bouncing around, let's kind of toggle through the other stock index futures though before we decide which one, if any, to leap into action to. Oh, remember that gold trade from yesterday? I forgot about it. We'll go check that out. It's still percolating, which is interesting. Micro E-mini NASDAQ here. Point of control is a little higher, but the volume profile on the NASDAQ is micro NASDAQ. Even though it's a huge volume market, is a little, it's never as smooth as the S&P. It's always kind of choppy. We always have these nodes of volume just popping up in the middle of the profile sometimes, as this very first set of traders and institutions and investors get busy in the stock market.
I'd be interesting, Jim, to see your moving averages down below. You like to look at your moving averages as how they pertain to each other, how they relate to each other. And we do see that on this chart, we did see a cross below. Again, moving averages can be used many ways. One of them is to see how, if you use two moving averages, how the trend might change. And what do? We see a shorter trend moving average changing direction before the longer trend, and that's a cross, right? So when the two cross, the shorter moving average is a little more bearish. That longer term moving average, not as bearish, but it'll catch up if the market continues to trend. So it's interesting to see what'll happen today, knowing what we know. That's pretty bearish signal on the moving averages.
Yeah, and the reason I like the convergence divergence between the two lines better is I just been faked out too many times with, oh, okay, it's going to cross now. I'm going short. And then it just bounces, they're tangled in love for a while and they shoot back up against me. And I'm like, oh man, that was dumb. So I like to look at the next candle for confirmation, which we have here at the 8:50 to 9 o'clock candle. But at that point, you've kind of missed the big candle already. So it's kind of a double-edged sword for me. I'm a little weary as a general matter, but I hear you. I think it's a good indicator, a good thing to look at. And Carlos has a couple observations. I do want to kind of jump over here to his observations because, as usual, they're always very insightful. Carlos says, rectangle covering weekly range 1635 to 1520 is the target on the downside for the Russell. Very interesting. And that's a long way away on the Russell. I mean, it's 100 and that would be a huge down move over the course of the next several days, but we'll keep an eye on that. Thank you for that, Carlos. And Carlos also has an interesting Euro US comment here. Let's go over the Euro FX. Again, looking for places to sell here. Real nice volume profile, by the way, on this one, Tom. It's like almost looks like a perfect, almost perfect. And when I see that, I get so excited. I'm so happy.
Picture book, right?
Yeah.
It's textbook.
Yeah. Carlos says the Euro FX is bouncing off an important 1.034 level back on December 2016. Okay, so you're looking at data from way back when they were predicting parity. This is good. And instead of the euro trading all the way to 1.2560, for now, 640, even 1079 could be short-term targets. I hear you, Carlos. We've been predicting parity on and off for these two currency pairs forever, as far as I can remember. It never happens, but this time might be different. I don't know. There seems to be more chatter about it. So, but thanks for that comment. I am going to draw a fib line here because I'm kind of interested in this. Let's do it.
Yeah, nice little this formation. Nice formation, almost a double top. Certainly found some support. Might be a range bound trading day, but we'll see what happens. We just opened, so the market could take us in a different direction, but it seems pretty range bound overnight trading into the pre-open and to now, right? So we're at the lower end of that range. Where you've got that wick at 4 o'clock, that dangling wick, not too huge. That's the low of the day. Can we make it and find support there? We'll see.
I'm drawing a line because they're free on NinjaTrader. They're fun, and it'll help me. Visual clues to me are important. I'm going to draw this, just kind of a double bottom here. I'm just going to draw that as we approach that as a target. Interesting. I think it helps me for sure. This is from yesterday. I think I may have tweaked it yesterday afternoon. I don't know. Point of control is almost the same from yesterday. We were around 39. Today we're around 40, right in that area. And so when I woke up, I saw this. I'm like, what the heck is this? Trend is up on the day, right? But then we have another peak, which is lower, another peak, which is lower. And I was like, all right, I'm going to keep this trade idea on for now and just kind of consider where we're at. Would I have put it on right now at this price level if I was flat in the morning? No, but we're going to let it ride and see how it goes. Excuse me. Let's just shoot over to the MES again. Just kind of look at first candle. Griffin says, see a couple of ticks below the bar you are looking at in place to stop 2 ticks above the last bar. That way, if it whips, it's a low risk trade. Oh, are you talking about the which? I'm sorry, Griffin. I just saw that comment. Which market are you talking about? Let me know. Watermark is actually, R. Harris says, how do you get the watermark? It's actually a plugin. If you Google, I don't have the website in front of me right now. I'll get it for you this afternoon or tomorrow, or even on Monday. But there's a plugin you download. It's free and you add it. It's really easy peasy. This first bar here, we're only 34 seconds left. Wow, how time flies. 34 seconds left for this next candle. Again, this is the E-mini S&P 500 stock index futures. I want to keep an eye on this in the Russell today. Just kind of look over at the Russell. Russell is a really big engulfing candle, I guess you'd call it, Tom.
Yeah, well, I think it's just a continuation of what the indicators are telling us, where they're pretty bearish on this 10-minute chart. But we'll see what happens, if you're expecting the market to reverse, and this just might be temporary, right? The pivot way down there, 172-ish, takes out the low. We saw that also on the E-mini, pivot above that low of the day. We could get there. Could be a wild day.
Yeah, for sure. There it is. There's the pivot right down there. I drew an arrow, 73.10. And Griffin says, don't know, LOL, just a way to get with the trend on a reversal bar, low risk. I know in my old age too, I'm like, wait a second. My memory is good for a good 60 seconds. After that, you got to remind me. It's like, huh? What'd you say? Oh my goodness. Thanks for that though, comment. Appreciate that. Okay, so Lewis, this is kind of reiterating Tom. Lewis's comments reiterating what we heard from the Spot Gamma folks and from Jimmy. Gamma expirations today. Be careful. A lot of volatility. I hear you. I do hear you for sure. And that's why we're going to keep our eye on these even numbers. Also, S&P 39.29. So it's not even close to an even number. So maybe my prediction's wrong. Sellers are coming in. Second bar. Okay, so now we can start talking about a trade idea because we have a second bar brewing here. Sellers are we don't have a lower low yet in the Russell. We don't have a lower low yet. We'll wait to kind of see how that ends up. Let's shoot over to the ES right now. This is not an engulfing candle. But it had a huge wick down here. And Tom, when I see these huge wicks, I think two competing theories here. One, it's a target for later on in the day, and then two, with this big wick down here, it's buyers have completely rejected this level down here. What's your point of view on that?
Well, I think they're right now opposed, right? But I think the fact that we can get down there later is perfectly in line, right? So there was price. Somebody agreed to a price down at that level earlier. Buyers came in and said, no. But if there are more sellers coming in, watch out. Why not? Why not go back down to that? So I agree. It seems competing, but because there's a time element, right? The big wick right now that happened or in the previous bar, yes, buyers rejected. But how many sellers are going to come in and reject that level? I think it's fine. Like that is definitely a good target. Look earlier in the day. We have support right around the 2:30, 3 o'clock hour. We had a lot of, a lot. I say a lot. It's just at that time, London comes in. We find some support there. It didn't go lower. So, it's coincident with that dangling wick that you just marked. So I see that could be an area of support. We may get back down to it, but this current candle certainly is telling us something different, right? It's trying to get back up to that high end. Yeah, for sure. And that's why I like to wait for the second 10 minutes in the equity and the stock index futures before I leap into action, because you really can get whipsawed here. But I do want to, there was a question from Andrew on certain, what are better fib levels? And I'll give you my point of view on that first. I mean, 38.2% is kind of the sweet spot, right? When you have a trend coming up in a normal day, you reverse back down, touch it, as it happened here. It's really nice from a closed candle point of view. We didn't quite get to it, but it came close. But that's kind of a textbook sweet spot for sure. 50% is a little less valuable in my mind, and 61.8% is very interesting, because in my book, if a candle closes below that 61.8%, I'm declaring the trend has changed. It's no longer an uptrend; it's turned into a downtrend. So what you see in a lot of textbooks and a lot of applications,
is, hey, when we start, if we close below we're going to use the 61.8% to go short. We're going to wait for validation that the trend is reversed and use it to go short. Now, I know it's a little counterintuitive, but that's what, from a longer term trade point of view, that's a real thing. And coupled with the fact that we have this low here that Tom's been talking about in the top of my rectangle, which is almost exactly, there's 3 areas of interest. Boom. We have support here, pre-Europe open. We have this dangling wick here on the first 10 minute, and we had that 61.8. So there's 2 ways to look at it with respect to that 61.8%. It gets more complicated, I think, with the fact that these ranges since Thanksgiving have been crazy. They've been huge, up and down, up and down. So you got to be really careful when you look at that. I don't know if I answered that question, but Tom, what's your opinion on that?
I agree. I'll expound. 38 and 61.8, 38.2. Those are the major fib levels. And what that means is what Jim described. We expect support or resistance at those levels. So since we're now in a downtrend, I expect support at 38%. I expect support at 62%. And what Jim is saying is if we breach those levels of support, we could see especially 62% in a retracement, because that retracement, the next stop is 100%. Well, not really. There are minor levels, but the idea is if support doesn't hold at the major Fibonacci level, then we might see that trend continue downward. And same thing up top. If we don't see resistance at the 62% level, if it goes through a 60% level on the upside, then that trend is certainly continuing. And that's the definition of a breakout, etc. But I would expect 62, 23%. Those are, 62, 38%. I would expect those as be the major levels in a Fibonacci retracement.
So that's, I find them useful. And I know there's different ways to draw it. I have my way. Other people have their way. Sellers are coming back in right now. At this point, we have the CCI hasn't gained any momentum. Moving average cross now is starting to diverge on the downside. This is looking kind of bearish to me right now. I'm going to respect that point of control, though. And the 23.6%, again, these are 2 areas of interest that are really close to each other, relatively close to each other. So from a 2-unit trade idea, my first unit here, this is a micro. I know it's kind of, it's going to require patience because we're selling off right now, but that's okay. We could do that. Now, the second unit, depending on how aggressive you want to be, could be at the break point between the contemporary candle and the previous candle. Or if you want to be really patient, just kind of wait until we get to a top of the value area. I'm going to be a little more aggressive today. I feel like the sense here is that we should be heading a little bit further south overall this morning. Stop's going to be above the highs right here. Again, you could do this because it's a micro and it gives you a relatively less risk compared to a classic. So you could spread out your trade a little bit more to kind of get around this crazy volatility, again, since Thanksgiving, that we're seeing with respect to stuff like average true ranges, average daily ranges, sizes of 10-minute candles and all of that stuff. So we're going to leave that trade idea in there and see what happens. In the meantime, let's just look at gold, see if anything's moving on gold. Gold is finally moving our way now. So, again, since this was literally from yesterday, I'm going to drag this down. I'm going to drag my stop down. I'm going to start tightening things up right now. Let me do my rectangle again. This will help me kind of think about it. I think it's reasonable to do this. Tighten it up a little bit. We'll even tighten it up more if we approach. And again, we got to ask ourselves: is this first target reasonable? I mean, that's pretty far away. It's $3. Well, we're going to keep it for now and just kind of think about it. Because I love this pivot. Tom's enlightened me. These pivots are something. There's a pivot point right here that's beckoning us. Come to me. Come to me. Oh my goodness. Griffin was talking about the RTY chart. Yeah, let's go back over to that. Wow, look at that. Pretty negative now. I hear you though. Thank you for that, Griffin. Appreciate that.
And that pivot's in play, Jim, just so you know. I mean, when we started when we started at 9:30, almost 20 minutes ago, we were up around what, 1794, 1795. And that pivot looks so far away. I mean, it looks like a lot of ocean between, on the chart between where we were and where it is.
But we're going to test the power of the pivot right now. We're going to sell on a breakout. If we actually make new lows, we're going to get short just for a little. We're going to test it, Tom. All right. I hear you. It's just it's kind of weird how lately this has been a thing. I don't know if people are saying, well, Jim, why don't you just sell it now? You would have a way huger advantage on your trade. I agree, we would, but again, is this going to be a area of support down here at the bottom or not? And if it breaks through, the idea of a breakout trade is, so if it breaks through the levels, then maybe you have a trend channel, maybe you have what I'm doing right now, the low of the day, maybe you have the high of the day. When it breaks through, or even, you could use the value area and say, all right, then I want to get short. So this could save you from a false move by doing this. Now, the risk of doing this is you sell the bottom. No one wants to do that. That's the risk. But anyway, let's give it a whirl. I do feel it should not, Russell, RTY shouldn't be up 5.6 today. And we could cancel this at any time. Let's just wait and see what happens with this candle. We're only at 30 seconds into it. It's early. This might be fun. We'll see what happens here. Let me shoot over to that micro Bitcoin though, and just see what it's doing. So the other thing to remember with the micro Bitcoin, it has been tracking the NASDAQ from a correlation point of view, pretty strong. So NASDAQ is up 114. I kind of like the idea of getting long. I'm wondering, Tom, if I should kind of use the bottom of the value area for an entry at this point, instead of being really super conservative down here at 23.6. I am gonna do that actually, unless you object strenuously.
No, I think that's a good place. We saw resistance earlier, then it became support earlier, meaning around midnight or 1 o'clock in the morning. That little doji, interesting how it trades, right? There are a lot of gaps in this because the nature of the market, right? It's moving around. We saw that resistance up there around 2 o'clock hour, just before the 2 o'clock hour. Then it becomes support around the 5 o'clock hour. Yeah, and we saw it test that support earlier. It might test it again. I think that's a great place.
Awesome. All right, and I'm just going to draw my rectangle here to give me a little bit better peace of mind. It just makes me feel better. I get to draw these things. Yeah. It makes me feel better. That's what Tom was talking about right there. Bottom of the value area, perfectly lined up. Let's wait and see what happens. Going back to the Q&A, sorry about that. E. Robbins says, is the volume light? It's funny. That's a great comment, E. Robbins, because we have 445,000 contracts traded already. It's not even the first half hour of the day. So it's not super, super high, but it's not light. I mean, it might seem light because the range isn't as crazy as it's been, up 80, down 80. So it's deceiving. But let me show you one thing that might undeceive it a little bit. I'm just going to open up a trading dome. I was doing this yesterday a little bit. This is the ES trading dome. And look at, it moves like crazy. It's bouncing around like popcorn. You have these bids and offers that are constantly changing, right? These are limit orders on the buy side to buy, limit orders on the sell side to sell. It's dynamic. Traders and algos and all sorts of stuff are playing in here in the order book. This is I love to see this picture, but this is where really you could kind of see this volumes like going crazy. You could add a volume histogram bar to this thing also. Let's do that real quick. Although we do have before I do that, before I show you how to add the volume to the dome, let's take a look at this micro ES, because I think we got to fill here and we have some work to do, right? We're short one right now, pretty close to where we're at. We need to take a unit off the table. I want to take a unit off the table because then I want to move my stop to break even. I'm assuming right now we're not going to get the second unit. If we do, we could change everything up. So what's a reasonable target here? And again, this dangling wick down here, I think it's reasonable. I want to be a little bit ahead of it, a little bit ahead, again, this is where the art comes in instead of the science, a little bit ahead of that. And it's also a little bit above the 61 point. I think it's reasonable. I'm going to throw it in right now. It is 20 handles down, but again, it's, CCI hasn't done its thing and hasn't penetrated the trend line up there. The moving average cross is kind of hard to tell.
I mean, that's still bearish. It's when you see those two widening or diverging, that tells me that that's a little more bullish when it's sloping down. So it's still, that lower level is still in play. I for sure.
All right. Well, I like it. I'm going to keep it. Let's see if we get our second unit. Then we'll have a new average price. Then we'll be able to peg that average price so that when we get one unit, that peg then will be our new stop for the second unit, if in fact that materializes. So we'll be patient and wait there. Andrew said the big block at 39.40 just got eviscerated. I love it. That's a new trading term we're going to use. Eviscerated. Let me put my crosshairs up there. Thank you for that observation. And yeah, I think you're right. I mean, again, I could draw another rectangle above right now, which I will. Rectangles are free, everybody. Just going to push it up to the here. We're kind of framing the conversation here from a body of a candle point of view. Now, this one has to come down. So that's interesting. So the body, this is a lower low from a body point of view. And now we have an inside bar and an inside body kind of figuring out direction. What time do we have, Tom? It's 9:55 here, 5 more minutes before that last 10 minutes. Excuse me. Yes,
I just want to, Jim, while we're on this chart, I want to mention Carlos has pointed out he loves when the VIX and the ES charts are both dropping. Doesn't get much challenging. Crazy, so much for correlation. So maybe you want to talk a little bit about what happens when VIX drops, or rather the ES drops, and what should happen to VIX, or how are they normally correlated? Yeah, and
so again, though, remember, it's options expiration says this is implied volatility. Is what the VIX is. But yeah, I mean, we see on big down days, or not even on big down days, in big trending days down, usually you see the VIX way, way up, right? And then when we start having these trending up days, the VIX gets kind of shrinks, right? And that's why it's called the fear index, right? For whatever the math or mechanics is behind it, I don't know. But I want to look at that number and say, hey, are we over 35 or at 35? That's extreme. Are we over 30? That's high. Are we less than, are we less than 30? That's more reasonable. Remember, the VIX has been for a couple of years trading between, 12 and 14, nonstop. And it was kind of like molasses. There wasn't a lot of movement in these markets. So that's an important comment for sure, Tom, by Carlos. And that's why I have it at the top of my market analyzer. The very, very top. Oh, we got one of the units on our gold trade finally. Let's go over and clean that up a little bit. So we have one unit now. We don't need the second stop. This is driving toward the pivot. I'm going to tighten up the stop right now just to kind of take care of it. And I'm going to bring it right back down to our, I'm going to use the bottom of the value. So I'm going to be better than where our position is tagged at. I'm going to be below, right at the value area right there. Series of lower lows. Now, if you're dynamically trailing stops like Griffin does, that's a thing to do. And maybe the stop actually should be a little higher, to be honest with you. I want to give myself, but this is a micro, so it's going to be a little choppy. I want to move it up a little higher. I want to be above these bodies of these three candles, the contemporary and then the two behind it. And we'll leave that go. So that's again, a nice thing about being able to average into a micro is not only could you have your targets and your stops further apart, but you could hold it overnight, which is accidentally what happened to me. Don't do it accidentally, do it on purpose. But and still again, if your bias is the same, you have a shot at it. So that's more of a swing trade than anything else. But like it, man, I like it. So, but yeah, thanks for that. Yeah, so much for correlation. So just to kind of put an exclamation point on Carlos's point, nothing's perfectly 100% correlated, right? I mean, Tom knows this better than me. You have this, a correlation between +1 and -1 from a textbook point of view between most markets, right? And sometimes it's close to 1, sometimes it's close to -1. And we've seen that on a risk on, risk off basis when you look at treasuries versus the U versus the ES. And right now you see the longer end of the yield in treasuries are green, right? They're positive. So are equities. They're positive. But the lower end of the yield is negative. So the yield curve shifting a little bit. And you would expect in a normal market these things to have be inverse related, and they're not right now. So that's you can extend that correlation idea to just about anything. Wow, 10 o'clock already. Time flies, man. Time flies when we're together. I love it. I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. A lot of leverage, a lot of volatility. A lot of opportunity, a lot of risk, easy on the day trade margins, trading on a real-time simulated live NinjaTrader trading platform today. That 10 o'clock bar just kicked in. Did we do anything in Russell? Oh, okay. Hang on a second. I remember this. At this point, Tom, I want to abandon this breakout trade idea. Didn't happen. We had buyers at the bottom. Good thing I remember this. I'm canceling this. Not interested anymore. And I'm going to draw my rectangle again at the bottom here. So again, I want to take advantage of that momentum. It didn't happen. It might happen later on today, but at that point, not for me. Momentum has changed, at least temporarily. Maybe it'll restore itself. I'm out of that trade idea.
One thing to note about this chart, I really like this chart in the sense that you've got you've got 2 minor distributions on the volume profile over on the left, Jim. Below the major one, right? So what could happen is the market might want to fill that gap between the 2 minor ones, as we're seeing that the market is struggling to get back. We're at 1783. That second minor, I shouldn't say that. The minor distribution that's still within the volume profile, the value area. This market might want to fill that gap and get back up to that minor one before we, eventually target the point of control. Now, as we trade around here, let's say the market does stay around here, that point of control could, vastly, make a stark change to one of those other distributions, because it's simply just the number of contracts traded, right? There's no averaging, there's no weighting. It's how many contracts are trading there. And as you see, we're trading around the 1780 number. That histogram bar on that minor profile is suddenly getting close to the point of control up there. So we may make an interesting level here. And but I do think the market, there is a thought that it might want to fill that gap and get back up to the profile that's existing now. So it'll be interesting. Just be aware that point of control might suddenly shift all the way down to where we're trading now, just because of the volume that's trading there. Yeah,
we're 580 contracts away, right? That's the difference between the old point of control and the competing point of control at the bottom. That's a great observation. So there's sort of 2 things there, right? One is, hey, the paradigm of this market for the rest of the day is going to shift down to a lower level, and we'll be trading around a new volume cluster. Or the competing idea is these gaps here are going to get filled, right? These gaps here, around 84, 85, and then back up here, 90, 91, will get filled for a more smooth distribution. In a normal market environment, I would vote for that. But with the way things are going, anything is possible. So I'm going to focus on where the actual volume is being clustered. Yes, right now, what are we doing here? We still have not hit our second unit. We're driving back down to our first unit, which is okay. We're just going to let it go on autopilot. It's 10 o'clock. We're in what I'm going to consider that first half hour period's over. A lot of the volume, it should slow down at this point. A lot of the institutional folks are probably done, maybe for the whole weekend, right? Maybe they're done for the whole weekend. We'll see. 500,000 right now at this point in time. We'll be trading over 1 million today is my prediction, and the E-mini S&P maybe closer to 1.5, depending on how wild the afternoon is as we go through this. And while we're actually on it, let's see what time is it. We got another minute here before we have to talk about lessons learned. So let's just kind of go right. Let's right click and look at the question came in from Daniel about volume pro. I'm off the shelf pretty much. I just make a couple of changes here. So when you add your volume profile, here's my tip. I got order flow volume profile. It's selected. I've added it. Now calculate on each tick because this usually it just says bar and close. You want to see these histogram bars like a trumpet, just kind of growing and growing. So I've changed it to each tick, and then ticks per level. This is also a little bit of a science as opposed to anything that's concrete. But I have it set at 4, right? And I like it to be an even number with respect to the size of the contract. So, for instance, the S&Ps trade in quarter points, right? So by having 4 ticks as my histogram height, I get a 1-point histogram. If it were gold or crude oil that's traded in tenths, then I would do a 5 or a 10 or a 2, something that's divisible. And then that kind of makes it a little bit less wonky. The second thing to consider is if you have a really big range day, it's okay to kind of either drill in or drill out and change these ticks to 2, 4, 8 on the ES. Just depends on how much detail, how granular you want to be. But generally speaking, the bigger the daily range for me, the higher the tick per level is going to be, as long as it's divisible by the unit size. And then all the way at the bottom here, I just click on show volume labels. I know it's way at the bottom. A lot of people miss it. I missed it for like the first month in NinjaTrader. I figured it out with the help of some very, very smart folks and was able to add that there. That's all. Everything else is out of the box for me.
Jim, can I just make one more suggestion? Because I found this helpful.
Yeah.
The profile width. You did talk about the profile width, right?
Yeah. Well, no, I didn't just now, but I hear you. That just is how far across the chart it goes, right?
So mine out of the box were a little different, and it took up more of the chart, and it was impeding my way of looking at the chart because I look at, a lot of indicators on the chart. I like to keep my profile a little more compact. So that number profile width is a percentage of how much of the chart it takes up. I like to keep it about 1/3 of the chart. I know when I came onto NinjaTrader, my settings out of the box were a little different. So just be clear that if you don't want it taking up the whole chart or half the chart, profile width is important too.
Awesome. Yeah. And that's just from the left-hand side to where it ends. Right. Exactly. Yeah. That's awesome. All right. So let's clean this up here. We're at let's talk about lessons learned. At this point, didn't get my second unit. That's okay. I'm going to right away change my stop to a 1 lot, cancel the second order idea. What am I doing here? I'm going to move my, I'm going to go, oh, we got filled while we spoke. All right, there we go. So we got 1 unit. It was successful. Cancel the other 2, cancel the stop. Don't forget about it, like I have a tendency to do in my older age. Griffin might appreciate that a little bit. We're still selling off here. So lessons learned number 1 is, okay, we were patient. We waited and it worked out. It worked out as we're driving to that pivot right now. The gold trade, this was a really good lesson learned because literally we got that one too. I'm going to cancel that stop. This was a carryover from last night, right? And it was directionally consistent with my bias. So I'm not going to beat myself up that much about it, especially going into a Friday. You don't forget about positions. And you hit your positions tab, go to orders, right click. You can hit cancel all, just right click and cancel all if you're not sure. For sure, try to do that if your intentions are not to carry something over. So from a lessons learned point of view, again, micros are your friends. That worked out okay. Let's go over to Bitcoin now. And we're in it. We're in it, Tom. So let's do a little work here. We need to come up with a reasonable target. And look at this is a dominant candle right now. We're seeing brewing on Bitcoin. What are you thinking, Tom?
Well, I'm looking that if we're looking for a target on the upside, I'm looking at the tops of those. I don't know, 3350, that area where we have wicks right up there. Yeah. There just seems there's a barrier to get past it, right? Except for that minor jump around 8 o'clock, there was a lot of congestion out around there. So, I'm looking, top of that area, and it's top of the value area. It's above the point of control. I think we have room to take, see if this dominant candle can be reversed.
Okay, sounds good. Remember, every tick's worth $5, right? Remember that. Every tick's worth $5 here. As this goes on, I'll probably tighten the stop a little bit. I'm going to respect these 2 wicks down here, but I want to give it a little bit more time as we go here. And I will tighten it up, guys. So let's do it now, just because we're almost done here. I'm going to exaggerate my rectangle down here, because again, I want to have about a 50% distance between the two. I'm going to move my stop up to the bottom of the rectangle, and it corresponds to another little mini volume node here. And we're going to see how that happens. We'll track it, we'll manage it as we go forward. Micro Bitcoin futures might be my new fun gig right now, so we're going to focus on it going forward. Whoa. Jim says, hey, how do I get my chart trader to switch accounts? Oh, that's easy. All right, let me show you real quickly. You gotta show it, right? So chart trader, not hidden. I have mine hidden. Turn it on, and then there's a panel here. One of the drop down menus says account, and you could toggle between accounts. I don't know why my accounts are called SimCag Simi, but that's the one we've been using, or you could toggle it over. So that's how you would do it on the chart trader. Hopefully that helps. Hopefully that's helpful. All right, so let's take a look forward here today. There's, Isabel, I think already cut and paste the rig count in there. Let's just take a look. I'm going to pull up the CME Group's calendar though, because the Econo Day does not go. CME Group events calendar, because Econo Day only gives you the free version of Econo Day. There's a paid version, but the free version, I'm cheap, so I'm not buying it. I shouldn't say that, because really you should have the right tools that you want for sure. Here's the events calendar. No, it's not. It should be economic release calendar. Hang tight, everybody. I know it's Friday. Economic calendar, events calendar. That's going to probably talk about their Christmas party. Let's pull this over. Let's what is today, Tom? I don't know. The 20th, May 20th. Again, nothing much to look for, nothing much here.
Baker Hughes rig count.
Yeah. And then and then the cattle thing at the end of the day, but markets closed by then anyway, for the grains. And then Monday though, which we have they do Sunday too because of Japan, right? Yeah. So let's double check. Sunday's the first column, Monday's the second column. Let's go all the way down. We're at the last week of the month. A Fed, Chicago Fed national activity. That's every Fed bank has to have something. Export inspections, that's a grain thing. Some routine treasuries. Atlanta Fed bank president, again, Bostic, our favorite speaker. He likes to talk, Tom. He's out there doing it. So not that much for Monday. So Sunday night will be interesting. Sunday night will be based on European news and anything that crazy happens overnight. Be on your toes. And one last thing about Bitcoin here. Remember, it's a little bit thinner right now. So best practices, again, entries, limit orders, targets, limit orders. With the stop loss, you can do a stop limit if you want, but again, you're going to be subject to that bid-ask spread anyway. So just be careful with that. Best practices going forward for sure. And then we got a lot of stuff next week coming up, Tom.
Right. Well, we've got Adam Fisk from Boss Trading on Traders Workshop. That's on Tuesday at noon Eastern. And then on Wednesday, See the Futures, you're going to be speaking to Bob Iacchino about energy futures. That should be really interesting. Next Thursday, Benefits of Futures. We're premiering Benefits of Futures with Anthony Crudelli. And that topic is how to hedge or insure your NFT position using crypto futures. So Anthony's dynamic personality certainly has the chops. He knows what he's talking about. And this is new. This NFT market is relatively new. Of course, crypto market, relatively new as well. So Anthony's on top of all of that. We'll be talking about that next Thursday, 10:30 Eastern time.
Yeah, awesome. Yeah, and I'm excited for all that stuff for sure. I do want to correct myself. I said micro Bitcoin $5 a tick, 50 cents a tick. I made a mistake. I misspoke. 50 cents a tick. Yeah, but also, Tommy, we talked to an old friend of mine yesterday. I just want to mention. I want to do a shout out anyway from our friend Anthony Drager at Edge Trading Group. Yeah, he was. We talked to him about coming on the show and doing some educational stuff. I've known him for a long period of time, from the Jack Bros days in the early 2000s. And me and Tom, I had a pleasure speaking with Anthony. He's going to be coming up also pretty soon on Traders Workshop.
Carlos just wants to point out that the Yankees are playing the White Sox in the Bronx this weekend, and that Carlos thinks that the Yankees are going to sweep the White Sox. What say you, Jim?
I'm siding with Carlos. I'm struggling to find a home team right now because I'm, in no man's land, and I want a home team. I do. So I'm thinking about the Tampa Bay, is my home team. I have cousins that half the Cagninas still live there. I have cousins that are there. My main contact there, Michael Suarez, is my cousin, and he literally, he's on the Tampa City Council and ran for mayor and all that stuff. And he'll trade you. He'll bet you pizzas for soft shell crab. I don't know what they got down there, but I'm leaning toward that. I don't know. What do you think about it, Tom?
I think Yankees hottest team in baseball. My daughter's a Yankees fan, so therefore I'm a Yankees fan. I'm a Cubs fan, so I can't be a White Sox fan. I would love to see the Yankees do some damage here, but it's fun. It's fun to see. White Sox are a great team, so it's just going to be a fun series all around.
Well, the real excitement is in England with the soccer clubs, they're trying to get to the right playoff level. It's kind of confusing if you're in the U.S. to know the different leagues, the Premier League versus all the other leagues that they have going on. But after Ted Lasso, I started following these guys. Liverpool's my team. We want them going. So I don't know. Anyway.
You got to get up early to watch those matches, though.
Carlos is going to do research now, and I know. You got Hulu. You could just watch it whenever. But Carlos is going to do research now and tell me everything I need to know about football in England. Nice. Mike Carroll says our high school team could sweep the White Sox. Yeah, I hear you. In any event, guys, thank you for your time today. Appreciate the thumbs up. I know we're in overtime. We're going past our time today. We're going to get yelled at. Thank you for the thumbs up, everybody. Greatly appreciate you guys being here. Tell your friends, family, countrymen, come on in and join the fun, and actually appreciate the support everybody gives each other, right? We're all trying to help each other out. This is a free thing. And we're all trying to get better going forward. Tom, I'm going to talk to you in a little bit later today. Thanks for all your help today.
Yeah, thank you. It's been great to be here, and we'll see everybody at the Bars Closing show I'll be hosting. We like to give Jim a little time out of the cage, so Friday afternoon you'll be sitting here with me, and we'll take a look at what happened today, and see if we can spot any possibilities while we're doing it.
That's right. Tom's doing all the heavy lifting this afternoon. Thank goodness I get a little time off. Appreciate it. And I'll be logged in listening, and I'll be glued to every word. So again, thanks for doing that. And finally, let me just leave you as we always do, especially on a Friday. If we don't see you this afternoon, we won't hold it against you, but please be safe out there. Be good to each other. Thank you for coming.